Hello guys, it's Tom here from the WB Trading Team, and on today's video I want to talk about what makes a great strategy. So we've done a few videos recently on strategies. You'll have seen some of our previous videos on how our strategies play out, and I always get asked by traders, what do I look for if I'm testing a strategy? What really qualifies as a good, successful strategy? There's no quick answer to this, I'll be honest, and everybody's opinions will slightly differ. But certainly what I want to do is take you through the type of things that I look for when I'm testing, when I'm back testing, I'm forward testing, I'm looking at other traders' strategy rules, what I look for in terms of elements of success, and also where I think traders could improve. I don't think what we're going to go through today, you need absolutely everything of these. Every trader is slightly different, but these are certainly the key areas that I look for. When I'm developing my own strategies, when I'm looking at other traders' results, I always have these elements in mind to see how realistic it is to actually trade, what are the results looking like, what's the consistency, and just tick these off in my head mentally. So we'll go through each of these areas. I'll talk you through why I think they're important and also kind of why I think you should focus on them when you're developing your own strategies, guys. So yeah, with that being said, let's get started for today. Just very quickly before we dive in, if you're still struggling with your trading, or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So here on the screen, we've got our 5 key areas of what I think you need to assess in terms of how successful your strategy can be, and also maybe where to improve if you think one of these areas are missing out. I'm going to go through all these in detail. We're going to look through consistency, the straightforward approach, time allocation, adaptability, and finally risk and reward. And I'll talk you through each of these in a little bit of detail to show you why I think they're really key. So we'll get started now with the first one, consistency. So consistency is vital because we don't want to just look at a small sample of results. Every so often I'll hear from a trader who will go, oh, this month I've noticed this on the market, Tom. Or, I've been testing this for a couple of weeks and I'm up sort of, 15%, 20% or whatever. Do you think I should start trading it? Well, those are really, really small sample sizes. More data is always better. There is no upper limit to what you need to do when you're doing a test. And particularly if you can automate a test, for example, an awful lot of data is going to help. For my tests, though, I like to run through and do initially 100 trades as a minimum to see if the strategy rules I've developed have any profitability in them, have any consistency. And that's a good benchmark to begin with. I'll then have a look at maybe refining, but I will look then to do a further test. If we're talking about intraday strategies, I like to do about a year's worth of testing. So to go back through the last 12 months, have a look at the results. Things to look for, when we're doing these large results, drawdowns is the key point. How many drawdowns are we getting? How large are they? Are you finding that, what you tested in the last month was just a real purple patch on the strategy, and actually what you'll see is plenty of drawdowns, every few months that would just erode those profits that you've built up? Or are they fairly minor? And also doing a test like this and understanding what the largest drawdown is gives you a little bit of safety and I think comfort when you start to live trade a strategy. If you get maybe a 5% drawdown as you're live trading, you can look back through and say, well, I've seen this in my results, so I know this is part of the strategy. And it just gives you a little bit of safety to say, okay, yeah, this has come before. We know this is part of a long-term consistent process. But absolutely, you want to be looking at quite a large minimum number of trades. Don't just do a month or a couple of weeks of testing before jumping in to trading something live. It's just not going to work. So next, we're going to have a look at the straightforward approach. So we need to consider a straightforward approach when we're testing our strategy to make sure that when we come to live trade it, if the results are looking positive enough, we can actually trade it feasibly. We don't want to have an overcomplicated mess of a strategy with all sorts of indicators, all sorts of trend lines that is easy enough to look through when you're back testing, but when you're actually coming to trade the strategy itself, you're just swamped with data, and maybe it's on a time frame that's, maybe you're scalping, for example. It's just going to make it too difficult to do. as simple as possible should always be the key here. We don't want to overcomplicate ourselves. Trading is difficult enough without having a convoluted set of rules to follow that we've developed because maybe it looked impressive on the screen, for example, and you had the time when you were back testing to check all these parameters. But when it actually comes to live trading, it's just not going to be feasible. It's just going to be too much of a mess visually and also too complicated to work out where that particular entry, stop loss and profits need to go. So yeah, really, as I say here, do a forward test after you've done your long-term back test. See how easy it is to plan out those trades live. Have a look and say, yeah, I may need to adjust something here because quite simply, it's too convoluted to trade. That's really one of the key elements a lot of traders miss. It looks easy on a back test. In reality, it may not be. So no reason to overcomplicate it if you don't have to. Keep it as simple as possible. So next we're going to have a look at time allocation and why that's important in our trades. So why is time allocation important? Well, this is different for every trader, but I've seen it quite a few times in the past. Traders come up with a great set of rules. They've tested it rigorously. They've checked the consistency. They've checked how straightforward and realistic and manageable it is to trade. And then we actually come to saying, right, okay, well, can you trade this? And the answer is no, because they've got other commitments. They're working at the time when the market is open and they need to trade this. So all that work, it's not for nothing, obviously, but at the moment, it's not feasible for them to trade. So always have that in your mind. It may sound simple, but I've seen plenty of traders who've missed it before. And basically, you need to make sure that it fits around your schedule, whether it's time zone, whether it's other commitments. Is it something that you can consistently trade easily enough with the time that you have free during the day or during the week? Great coming up with a strategy that you might be able to use, a few months or a few years down the line, absolutely. But right now, find something that works for you. And this is going to be different for every trader, but it's absolutely vital to remember that. It might sound simple, but trust me, I've seen it plenty of times where traders have come up with a great set of rules that personally they can't use. And it's going to be one of the most frustrating things, I'm sure. So now we've covered that, let's have a look through at adaptability and how that matters. So why is adaptability important? Well, this isn't as vital as the earlier ones, certainly. I always like to include it and talk about it when I'm speaking with traders about their strategy results and their testing, because it's so much easier to take a given set of rules that you've already developed for one market and see if they work on another, rather than having to develop, say, a brand new strategy on another market. Adaptability, like I said, it's not crucial for every strategy. Some of the strategies on our course, they work really well on a handful of markets, not so great on others, but all of them do have the ability for you to adapt and move to different markets. We think that's a key area. Some traders will stick by, right, one market, I'm just going to trade this, that's it, this strategy works on this market. But for us, certainly with the WB trading strategies and with some of my own strategies, I like to make sure that they have the ability to change markets, and we can trade them at different session opens, for example. You might want to trade the London Open, the New York Open, etc. It's something that once you have a set of rules as well, it's very easy then to test it on different markets. So, check that. It's not really a vital part of making a successful strategy, but it's a great bonus to have if you can change things and move to different markets quite easily with your strategy. So let's finally look then at what I would say probably is one of the most important bits, risk and reward. Now, if you've seen any of our previous videos on the channel, or if you're part of the WB trading community, you'll know how vital we take risk and reward management. It's at the forefront of everything we should do when we're looking at our trades. And every trader is slightly different in this aspect. The key point here is, if you are developing a strategy, make it fit with your risk and reward profile. What I mean by that is, if you're a cautious trader, don't develop a strategy where you're going for, say, 15, 20 hour trade, because what you're going to end up doing is when you're live trading, when there's money on the table, you're just going to start closing trades early. You're going to think, this isn't getting up to 20 hour, I'm panicking now, I don't want to lose, I don't want to go from like maybe plus 5R to -1, I'm going to close the trade early. So make sure you have that in mind. And it's easy to test that. It's easy to test a bunch of different variables. If you look back at our previous video, where I talk through a couple of strategy results, you can see how we can test incremental R quite easily. Another thing for this, look at the volume of trading. how that lines up with margin you have available as well. You don't want to be ending up having to trade maybe, really small percentage size. If you're trading, say, 1%, how many trades can you activate at one time on your chart? Is that something that you're going to struggle with the margin available? Could you only place 1 or 2 trades at a time? Therefore, a strategy which revolves around looking at dozens of markets, that might not be so feasible. So thinking about these areas. And finally, not something that we do with our strategies, but if you are slightly more risk adverse, you want to go for higher targets, but you're concerned about obviously coming back to stop loss once you're in profit, look at the options when you're testing about trailing a stop. That could be something that may work for you. Again, part of a rigorous back test and a forward test, but it's something to take into account, certainly. But the key point is find that profit target, find that setup that's going to work with your risk psychology, and it's going to ensure that you're not breaking your rules constantly when there's money on the table. So yeah, guys, there we go. Those are the key areas. There are a few other little ones, and certainly some of you may disagree. It'd be good to hear from you if there are areas that you look at when you're back testing, forward testing, and developing strategy rules. But those are the key points that I think, without those, it's just not going to be a realistic test. So in summary, they're the areas that I always look at when I'm looking to develop strategy rules or check rules with traders. And yeah, you can fine tune these certainly, but the key point is making sure that they fit for you as an individual trader. Some of my risk management rules may not work for you, and vice versa. Some of the areas and markets and times that I can trade during the day might not work. So make sure it matters and it fits with what you can do as a trader. And your limitations in terms of time for trading and your understanding and appreciation of what you want to aim for as a risk and reward ratio. Look at those key areas, make sure it works. It's going to be different for every trader. If you have any questions, guys, obviously, best thing to do, book a call with one of our team if you want to find out a little bit more about how our strategies work, how we trade. If you have any suggestions, for topics that you'd like to see us cover on the channel in the future, just drop them below in the comments. We'll pick them up and we'll put together a video to help out if we can there as well. As always, thank you for watching. Hopefully that's been really useful information. Hopefully that's inspired you to have a look at doing a back test or a forward test or revising one if you're already doing one. And yeah, hopefully I'll see you on the next video, guys. Take care.